The Art of Smart Investing, 7 Principles to Grow Your Money. Introduction. Investing is not just about picking the right stock or predicting the market. True investing is an art, a balance of knowledge, discipline, patience, and mindset. Anyone can throw money into the market, but only those who understand the principles of smart investing can grow wealth steadily without losing sleep. Smart investing is not gambling. It's not chasing the latest trend. It's about building a strategy that works over the long term. In this guide, we'll explore 7 principles of smart investing, timeless strategies and mindsets that can help you grow your money, protect it, and achieve financial freedom. Principle 1. Think long-term, not short-term. One of the biggest mistakes people make in investing is chasing quick profits. They want to double their money fast, but that usually leads to disappointment. The stock market, real estate, and even businesses go up and down every day. If you only think short-term, those ups and downs will scare you. But here's the truth. Real wealth is built over years, even decades. The longer you stay invested, the more your money has time to grow through compounding, when your profits start earning profits. Put your money into long-term investments like index funds, blue-chip stocks, or real estate. These may not make you rich overnight, but they steadily build wealth over time. Be patient. When markets fall, don't panic. Instead, see it as an opportunity to buy good investments at a discount. Remember, downturns are temporary, but growth over time is powerful. Smart investors always focus on long-term investing, building wealth, and financial freedom, not quick wins. Smart investors play the long game.
Principle 2. Diversification is your safety net. You've probably heard the saying, don't put all your eggs in one basket. The same rule applies to investing. If you put all your money into one company or one type of investment and it fails, you could lose everything. That's where diversification comes in. Diversification means spreading your money across different types of investments so that if one fails, others can protect you. Build a balanced portfolio. Mix your money across stocks, bonds, real estate, ETFs, and even safe assets like gold. This way, you're not relying on just one investment to succeed. Don't chase after a single hot stock or trendy investment. They might look exciting, but they're risky. Instead, think long-term and focus on steady growth with less risk. Smart investors use diversification, portfolio balance, and risk management to protect and grow their wealth. Diversification is your safety net. It protects you from big losses and helps you grow wealth steadily. Principle 3. Understand what you invest in. Warren Buffett once said, "Never invest in a business you don't understand." And he's right. One of the biggest mistakes new investors make is blindly following stock tips, social media trends, or what everyone else is buying. That's risky and often leads to losses. To be a smart investor, you need to know exactly where your money is going. Before you invest, do your homework. Research the company, industry, or asset. Ask yourself, how does this make money? What risks are involved? Does it have long-term potential? If the answers aren't clear, don't invest. Think with clarity and confidence. Investing should feel like an informed decision, not a gamble. If you don't understand something, skip it. There will always be other opportunities. Smart investors focus on knowledge, research, and informed investing decisions, not guesses. Understand your investments. Confidence comes from clarity, not from following the crowd.
Principle 4. Control your emotions. When it comes to investing, your biggest enemy is often not the market. It's your emotions. 2 forces ruin investors more than anything else: fear and greed. Fear makes you sell too early, especially when markets drop. Greed makes you buy too high, chasing quick profits. Both can destroy your wealth if you let emotions control your decisions. Create a clear investment plan. Decide in advance how much you'll invest, when you'll buy, and when you'll sell. Then stick to that plan, no matter what the news or the market is saying. Stay calm when markets fall. They always recover over time. Don't get overly excited when prices rise either. The best investors remain steady and disciplined. Smart investors win by practicing emotional control, disciplined, and long-term investing strategies. Smart investors master themselves before they master the market.
Principle 5. Consistency beats perfection. Many new investors believe they have to time the market perfectly, buy at the very bottom and sell at the very top. But here's the truth. Even professional investors rarely get it right. The secret to building wealth isn't perfection, it's consistency. When you invest regularly over time, your money grows through the power of compounding, where your earnings generate even more earnings. Make investing automatic. Set up monthly contributions to index funds, ETFs, or retirement accounts. Treat it like paying yourself first. Even small amounts invested consistently can grow into a large fortune over time. Don't focus on being perfect. Focus on being consistent. Think of investing like planting seeds. One seed today may not look like much, but over time it grows into a forest. Smart investors use consistent investing, compounding, and dollar-cost averaging to build long-term wealth. Bottom line, smart investors know it's not about timing the market, it's about time in the market. Consistency always beats perfection. Principle 6. Protect yourself from risk. Every investment comes with some level of risk. The market can rise, but it can also fall. Businesses can grow, but they can also fail. Smart investors know they can't remove risk completely, but they can manage it. Always keep an emergency fund so you're not forced to sell investments during tough times. Never invest money you can't afford to lose. If you're trading, use tools like stop-loss orders to limit potential losses. Protect valuable assets with insurance, whether it's your home, health, or business. Think defense first. Growing your wealth is important, but protecting it is just as important. A strong defense keeps you in the game long enough to enjoy long-term growth. Smart investors use risk management, emergency funds, and defensive investing strategies to protect their money. Smart investors play defense before offense. Protecting your wealth is the foundation of financial success.
Principle 7. Keep learning and adapting. The world is always changing. New industries rise, technologies disrupt old ones, and markets move in unexpected ways. What worked yesterday may not work tomorrow. That's why smart investors never stop learning. Read books on investing and personal finance. Follow market news and global trends. Study the habits of successful investors and apply what fits your situation. Review your portfolio regularly and make adjustments as your goals or market conditions change. Stay humble. No one knows everything, and even the best investors keep learning. The more knowledge you gain, the more confident and prepared you'll be to make smart financial decisions. Smart investors focus on lifelong learning, financial education, and adapting strategies to grow wealth. Smart investors are lifelong learners. They grow with the market, not against it.
Conclusion. The art of smart investing isn't about luck or gambling. It's about discipline, patience, and strategy. Anyone can throw money into the market, but only those who stay calm, plan wisely, and think long-term truly succeed. Let's quickly recap the 7 principles of smart investing. Think long-term. Wealth grows over years, not days. Diversify. Spread your risk so one mistake doesn't wipe you out. Understand your investments.
Confidence comes from clarity, not guesses. Control emotions. Fear and greed are the biggest enemies of wealth. Be consistent. Small, regular steps lead to massive results. Manage risk. Protect your wealth as carefully as you grow it. Keep learning. The world changes, and smart investors grow with it. If you follow these principles, you won't just grow your money, you'll also grow your confidence, your freedom, and your peace of mind. Because true wealth isn't about chasing quick wins or following trends. True wealth is built steadily, wisely, and with vision. And that, my friend, is the real art of smart investing.